Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he joins us for this weekly market update. Today is Tuesday, August 8th, 2023. Andy, thanks for coming back on Liberty and Finance.
Good to be back, Dunnigan. Can you hear me okay now?
Yes, we sure can.
All right, good. Good to be back. Thanks for having me, buddy. Appreciate you making a pivot for me. I was out in Texas visiting with Bill Holter. It was the hottest weather I've ever experienced in my life, and that's coming from a guy who's lived in Florida for the last few years. The weather in Texas is like a blast furnace. So
yeah, we were told that Phoenix hit 130 today, and Dallas hit 127. We've heard that
it's a hold. I've never felt anything like it. I mean, it's unreal how hot it is. It's almost I don't know how people live in it, but nonetheless, I'm glad.
Well, it's not a typical. Yeah, definitely we are having a heat wave. It's not a typical one at all. They're saying that even the bees are having trouble, or their bees are dying in Arizona. Some of the wax is melting in the hives, and they're having trouble, getting through. So there's some pretty interesting theories about what's going on with that beyond what we're being told. In fact, today's title of this interview is "What You're Not Being Told." It's the theme of what I brought up at the conference at the Rule Symposium on Natural Resource Investing, is that what you're not being told can hurt you.
Right.
And I guess one thing I'd like, if you could maybe kick us off with, is what we're not being told about the lack of, I guess, the rule of law on the major metals exchanges. That's something that's near and dear to your heart because it affects your livelihood. It's something that Miles Franklin has to hedge against as far as actions on the major markets. But our interviews with, for example, Bill Murphy, the co-founder of GATA.org, the Gold Antitrust Action Committee, over the years, he has presented, as has Ted Butler, example after example after example, documented to the CFTC of illegal, what he claims, GATA claims are illegal trading practices happening on the markets that go. A blind eye gets turned to them, and we've certainly all lived through the last 3 years of such things as telling police, being told to stand down and defund the police. So that principle of the lack of the rule of law and how that has affected ordinary investors, companies that need to validly hedge against things happening on the markets. Can you talk to us about that first example of something you're not being told as far as the lack of enforcement on the major metals exchanges?
Yeah, it's a big deal. Just last week or the week before, we had silver from a technical standpoint really starting to break out of a wedge pattern. And it was a very bullish formation where a lot of the analysts, the technical analysts, were expecting a much higher price as a result of it. And you see a ridiculous smashing by the commercial banks where they came in and increased their short position to the open interest is so many times greater than the availability of bars to be delivered. Many times greater. This was done specifically to keep the price of silver from rising and gaining more attention, because the majority of the advisories, the majority of the funds, they all employ technical analysis into their decision making. And this was an overt attempt to keep, I believe, silver from going higher because it was going to trigger a pretty significant buy signal. But the lack of enforcement by the CFTC is startling. This is not how free markets should be operated, and it's completely obvious what had happened. It's a drive-by shooting. They flushed everybody out, and this becomes a very dangerous game when you have many times the open interest as our bars backing the ability to be delivered. And so, yeah, that is a big deal. People wonder, well, why isn't the price going higher? Well, my question would be, why isn't the CFTC enforcing what is a ridiculously concentrated short position by a couple of the largest commercial banks, probably the biggest chief being right now Bank of America? And, this is not going to change until it does, but it's the type of setup where you could see a very significant move higher, just simply based upon this leverage that is being injected into the system. And it's being leveraged without any governance, without any checks and balances. And, everyone should read Ted Butler's article from yesterday or the day before. It might even been today. I'm a little behind on my research, but I just read it, and that's exactly what he's saying, is that they came in overtly smashed the heck out of it, and to such a degree that, you know, it's pretty hard to see any real rationale to do it in an environment where we have a shortage of silver, where there's so many reasons the price should be going higher. But I will say, at least from a standpoint of trying to remain optimistic, we are ridiculously oversold. And I would expect we are very, very near the bottom of this once again, this flush out by the commercial banks.
Yeah, another person whom we've interviewed on our channel multiple times, Michael Oliver, who looks at momentum trends, said about 2 months ago, all lights are green for gold and silver. So it's there's nothing standing in their way at this point. But as you pointed out several times, there's something that's not natural that stands in their way when they're ready to break out. And sometimes, and you've also pointed out to us that you can only push a market so long in a direction when it wants to go the other direction. I think you just touched on that principle again, but maybe reminding us of that.
It. I do think that's a very true statement. I mean, it's been very easy for the commercial banks for the West, who wanted to support a bond market forever with interest rates so low. With interest rates rising, everything is starting to become a little bit different and a little bit riskier, and you're starting to see things break. This is a game that becomes very, very dangerous when you have global demand, whether it be in military, whether it be in industrial, or of course, the big monetary push that we've seen in gold and silver, where, you know, it's not just silver. You see the same thing with gold, and yet the central banks bought more in the first half of this year than ever before. And so, look, this is a deal where it was easy to suppress the price when nobody wanted it, but you're seeing such a need and demand for it on a much higher level than the retail. You know, it's interesting that Ted Butler will cite a real shortage in the 1,000-ounce bars on the wholesale level. And I guess when you say there's just roughly 30 million ounces in the registered category, that's a true statement. When you see the deliveries off of the exchanges all over the place, including huge redemptions out of SLV and GLD, which are the authorized participants doing it very covertly, the demand at a level much higher than where we sit is real, and as is the shortage of availability. It's certainly based upon the open interest. It's many times less bars backing those contracts, where if they stood for delivery, well, we'd have a problem. That's interesting, because we've seen the premiums on everything come down and the demand on the retail side come down. Now, I will say this, it's interesting that today we saw a slight increase in the Silver Eagle premium. And so, you know, maybe people are starting to wake back up again. I'm not quite sure, but I would simply say that I do think that there's something going on much higher than where we sit, and they are using suppression of price and of rhetoric and this environment to really have their way with the market. And I would argue ultimately continue on their plan to drain the exchanges of the investable silver before everyone wakes up and says, hey, I want to take delivery too. But it'll just be very obvious that there isn't enough supply at that level to meet that kind of demand. And we're talking, you know, really, really high industrial level or military level, where, look, we've sent off so much of our artillery, yet there is silver used in the guidance systems of so many of the advanced weaponry that we see. It's needed in military, it's needed in green and digital applications. It's still voraciously accumulated as a monetary asset. The story isn't over with silver yet, but it's a frustrating one, and I get it. It's one that I think is trying the patience of everyone, even the most logical, ardent gold and silver bulls. I think they have a hard time with the counterintuitive nature of it and the fact that it just continues to drag on and on and on until it doesn't. And I'm very confident we will see that moment based upon the demand that we see at that level, and really the desire by the big players to do all they can to keep it from going higher. You can't do that when the system really starts to break. And the question is, how close are we to that moment? I would argue closer than most people would give credibility to.
Right. In the spirit of things you're not being told can hurt you. That's another example of the fact that we're being told that we should be paying attention to, I guess, well, if you listen to John Williams from shadowstats.com, basically false government statistics in terms of the inflation rate, the value of the dollar, the unemployment rate, how well the economy is doing, the GDP, everything. And what they're not telling us is that the central banks all around the world have been accumulating physical precious metals, gold particularly, at record levels for the past several years. You've touched on that in the past, but people whom we talk to in the ordinary world have no idea about that. They're not being told that. They're not being told. So in other words, a lot of the decisions we're trying to base on facts and reality in our lives, we're not being told the facts of what's going on. So how can you make good decisions? And when we try to reach out to people we care about to try to help educate them, they look at us like we're crazy because they've never heard this stuff before. So it sounds like we're making it up rather than, no, you're just not being told what's actually happening right in front of your eyes.
Yeah, and most people would, at face value, they would take that as, oh, come on. It's, I think there are a lot of things done again that people, you and I, and people who listen to this show take for granted in terms of what is truth, what is reality, and what isn't. And that's I couldn't agree with you more. There are a lot of very smart, well-read people out there, maybe just arguably reading the wrong things. But I mean, look, you talk about rationale to be doing this. The Treasury Department, their borrowing estimate just came out, and look, we've added $1.85 trillion in 6 months, right? It took 209 years to add the first $1.85 trillion. We did it in 9 months. The Congressional Budget Office just came out and said that the government will add $5 billion to its debt pile every single day for the next 10 years. And what I found, kind of to your point, and a lot of the stuff that you've heard me talk about lately, Dunnigan, and also at the show, was, you're right, things were not being told, things that seem to be amiss and awry with what's happening on a level here, a social level, on a moral level, spiritual level, all of these things. And we talked about cancel culture and transgenderism and censoring and the rule of law not being equally administered. All of that stuff is eroding the fabric of this country and the way that people are viewing this country. And I think it's a big deal. It's something that needs to be understood, that this is not just about the numbers that we're seeing in precious metals and the mismanagement of the reserve currency. It's all the things that are happening behind the scenes too. And I think that I don't think we've even begun to see anything yet. But one of the most interesting things that I took away from what Fitch had to say was that it wasn't just about the economics of it. They said that it's also a breakdown in governance, and that you're seeing problems with the way the US is handling their affairs. And so, look, this is a big deal. I think you're starting to see even the people who are taking a look at this that weren't traditionally inclined to say things like this are having a hard time keeping their mouth closed. Fitch being one of them. I'm going to see if I can find the actual comment that he said. He said, I don't know if I have it. I just read it, but it basically said, the guy that's involved with doing this for Fitch said you're looking at a big problem in governance and the way that the U.S. is handling their affairs. And I think that's something that look, it's just as if the people who are running this country have lost their mind at the way that they're accumulating all of this debt, and rates continue to rise. And what's really, really interesting, at the same time, you have the Federal Reserve, who's in essence broken insolvent too. So you have the largest, most influential bank in the world that is more or less insolvent as rates have gone so high, $1 trillion underwater. And at the same time, you have the banks where we're told there's 600 billion plus in unrealized losses. There's a new report that just came out that said it's actually closer to over $2 trillion in unrealized losses, which would wipe out the equity of the entire system. So where are we in this game? I don't know, but I don't think we've been told the truth as to where we are with the problems with the banks. even by a little bit. And I think it's going to be the catalyst for a lot of problems over the next 15 months, as over $1 trillion in these commercial real estate loans start to need to be reset. They're all non-recourse. The majority of them are non-recourse loans, and you're going to see the banks really start to suffer as this happens, and have to come up with an ability to. There's no way that they can come up with the ability to write that off when their balance sheets are decimated the way they are. And then the question is, do these banks get bailed in? And I think you're going to see that, and probably even this year. And that's when things really start to get crazy.
Yes, those are great examples of more things that most people aren't being told. And that's that the banks are much more fragile. You know, we had Yellen and others all circling the wagons about 3 months ago saying, okay, we're gonna do what's necessary to systemically support the systemically important banks, that sort of thing. And that has caused people who listened carefully to think, wait a minute, what about all the other banks? And there's this idea of there's going to be this cascaded culling of small and regional banks, then into these too big to fail banks, and then right up under the Fed, is something that people are not being told, that there is going to be massive. And we had that leaked FDIC video that actually discussed at the level of that strategy planning at the FDIC, that there are going to be runs on the banks. And we don't want to talk about it because if the public knew that, then we'd have unintended consequences, meaning, you know, it might trigger that eventuality to happen. One wonders, you know, of course, you know, the principle of don't shout fire in a crowded movie theater, but if it actually is on fire, how do you protect people? How do you really watch after people's best interest? Because that's not what's going on right now.
It is on fire. It is on fire. These banks have loaded up on government bonds and commercial real estate bonds and municipal bonds. And as rates rise, it's very bad for the banks. And look, remember, the banks spent most of the pandemic buying huge amounts of bonds at or near, you know, record low rates, some as low as 0%. And now with rates going much higher, these banks have purchased all the bonds that they purchased in 2020 and 2021. They've lost an enormous amount of value, and they have massive unrealized losses. And like I was saying, the FDIC said at the end of 2022, there was 620 billion in unrealized losses. You know, you're getting the National Bureau of Economic Research that says, no, it's 2.2 trillion, which would wipe out all the equity in the banking system. And then the Federal Reserve, as I mentioned, $1 trillion in debt, they're insolvent too. And so when you talk about $33 trillion in public debt, raising rates to fight inflation creates massive increased costs in servicing this debt. And that's where the problem lies. What happens when there's greater strain on a system that's already way maxed out, strained, yet they're not talking about it? And here we get, you know, 10 banks downgraded, and 6 more are on the list to be downgraded, including US Bank, where, you know, I'm from Minneapolis, and that's a huge bank in Minnesota. And, you know, this is a very scary deal. The fact that delinquency rates for commercial real estate mortgages are skyrocketing is a precursor to what is coming. So, yeah, I think we're not being told, because you're right. Yelling fire in a crowded theater is not a good idea. But, you know, if you can't see what's coming at you, you're not going to get out of the way of it. And it's going to catch a lot of people, I think, off guard. If one of these big banks fails and it is bailed in the way the DoddFrank law says it's supposed to be.
Oh, that's another example. Just let me interrupt you right there. That's another example of things that people are not being told. Walk up and down the street, ask 10, ask 50, ask 100 people. What is the Dodd-Frank law? Why is it important for you to understand what it means to you as a depositor in a bank? How many people do you think will have a intelligible answer, who understand that they are subject to that? Basically, nothing in the bank is yours. I don't think most people know that.
Right, and even making it worse, every single talking head moron analyst on CNBC and NBC and ABC, they all came out, and Janet Yellen came out and chastised Fitch. You know, like, no big deal. Don't worry. Just nothing to see here. Keep on walking.
Yeah. Shoot the messenger. Absolutely.
Yes, and it's awful. And here's that quote I wanted to try to find. James McCormick, Fitch Ratings Managing Director and Global Head of Sovereign and Supranational Ratings, said earlier this year, it's not just the debt limit. What we've seen in the United States, it's a steady deterioration in governance. So it's a bigger picture. And that's one of the things that I've talked a lot about recently. Is it all connected? This fraying of the fabric on the inside of the country, this moral decay, the questioning of truth and honesty and liberty and justice in this country, what we stand for, the Statue of Liberty, the beacon of light, of freedom, of liberty, of honesty. And these things are I think, being called into question, and it is not lost on our allies. And now it's not even lost on the rating agencies, at least those that have the courage to stand up and,
Yep.
and
Yeah, we've been
thing.
wondering when somebody is going to stand up and tell the truth in a number of things. There's certainly been some medical things in the last 3 years where we're waiting for somebody to stand up and tell the truth without, those few being made examples of being smacked down and deplatformed, et cetera. Indivisible Man put a comment in here I think you would be able to respond to. And it's something you've talked about before, even from the international banking level. He says there already are runs on the banks. It's just being done electronically and you don't see it. Back in the 1930s and the Great Depression, when there were runs on the banks, you saw physical lines of people for blocks around the corner and standing outside the banks trying to get their deposits out of the banks before the bank completely ran out of funds to be able to return people's deposits. But now you've told us in the past couple of times about international, I don't know if it's IMF or commentators saying that we need to make sure that people can't electronically take their money out of the banks. That's a problem.
Yeah, that's interesting. That's Kristalina Georgieva, the head of the IMF. And she said the problem with the bank runs or the failure in the banks, when this was speaking to Silicon Valley Bank and Signature Bank, was the ability of the depositor to rapidly move their funds with a mouse click. That there should be some sort of governance on that. People shouldn't be able to move their funds quite as quickly. And I'll tell you, the amount of pushback that our clients are receiving trying to send wires is extraordinary, and it's growing. And the frustration that our clients, I don't know if you've experienced it, but all of a sudden we're experiencing a lot of it, Dunnigan, where people are telling us they're getting, finding it really difficult to wire money out of their banks. And that's exactly right. The bank runs, if you look, everyone's focusing on the regional banks, and rightfully so to a degree. But the biggest money of all is fleeing out of the commercial banks. And, we've always thought that the commercial banks, the big ones, were the ones that were too big, that they should be avoided. They're too risky. They're too systemic. But over the last several months, people have that feeling about the small, undercapitalized, over-leveraged regional banks, pushing everyone into those too big to fail, supposedly too big to fail banks. Yet the amount of money coming out of those banks is dwarfing that coming out of the regional banks. And these are the very, very, very wealthy people that must just be going directly to the Treasury. And what's really interesting about all this is at the same time that China and Japan and Saudi Arabia and the rest of these countries are no longer buying our bonds and in fact shedding them, the American public is running headlong into this and buying them hand over fist. Is that a setup waiting to happen? I don't know, but I can tell you I find it to be very interesting. So my guess is that's exactly where that big money is going. If you have $50 million in Morgan Stanley, would you rather leave it there or send it to treasurydirect.gov? Would you rather bet on the solvency of a 6-month investment with the US government or on a commercial bank? If the US government goes, the banks are dead anyway. So I think these people who are running out of the commercial banks at record level that shows no sign of abating are looking at it as the lesser of two evils. And the ability to, at least for a period of time with short-term duration treasuries, remove that systemic risk that is, I think, something that will become more visible and more contagious as time goes by.
One other example, I think, that people can see the difficulty that banks are having in meeting some of the withdrawals are people trying to send bank wires. I had a client today who's been contemplating for months and then weeks and then days, trying to get a lot of his funds out of several banks, specifically in California, and tried basically doing a road trip today, driving around to send wires to fill a significant order that he placed. And he he came back after one day of driving around and told me he's going to hit it again tomorrow because he got stonewalled by managers at two banks that he went to trying to get his funds out. So there's resistance and reluctance on the part of banks to allow those withdrawals to happen. I don't know if you have any further incidents of that, but that's something that people aren't being told. Most people don't realize that.
The craziest one that I can speak to happened a few weeks ago, and it was a fairly significant order. And the client had just changed her mailing address. Now that's it, where she lives, right? She moved residences, but I don't understand how that would affect her ability to send a wire. And she was told by Bank of America that she had to wait 1 week in order to send a wire because she moved and changed addresses. So, well, that would be like me moving from Minneapolis to Florida. So what? My account didn't move. My account is still back there, one of them with US Bank. It never moved. The being told that you have to wait a week to send a wire because you just physically changed addresses is something I'd never heard of. Makes no sense to me. These are the kind of things that we are hearing. And I hear, someone goes to try and send a wire and they're told by their bank that it has to be reviewed by compliance. Well, whose money is it anyway? What do you care? Why does it have to go through compliance? I want my money moved, and where it's going is none of your damn business. Well, these are the types of things that are going by the wayside. And, I think this is the scariest part ultimately of a central bank digital currency, complete and total control. It's one thing to make it difficult. It's another thing to control. And I know we're not there yet, but you can look and see what's happening in Australia. They're moving in that direction. We are moving in that direction. And this isn't going to get any better as we see more strain on the banks. And I don't know what to tell people to do. We all are in the same boat here. And FDIC is so undercapitalized at roughly 150 or less billion dollars in assets backing $18 trillion in deposits. I mean, is it really a backstop? I'm not quite sure. How many people know that one? That that FDIC borrowed like 170 billion from the Fed to ensure the orderly transition with Silicon Valley Bank and Signature Bank. The FDIC is borrowing money from the Federal Reserve. So, I mean, how safe is the system? And I think people have a sense of safety in this bank, or most people in their banks, most people do, that I would argue is very, very misplaced and potentially very dangerous. If some of these banks go, if one goes and it's bailed in, it will become chaos immediately in this country as people freak out. And there is a systemic relationship with all of these banks. And, with so much in derivatives, who knows who the counterparty is in half of these transactions that are very much part of the system. Where one big bank goes, it can bring down a whole host of other banks. So This is not over yet, Dunnigan, not by a long shot. I really, really do believe that. And yet they're going to continue to raise rates. They're going to continue to put more strain on the banks. And as these loans and these leases come due to be reset, that's when there's going to be some fireworks. And it'll always happen on a Friday night. You'll wake up Monday morning, and if you haven't done something to prepare, if you haven't done something to mitigate your exposure to one bank, ignoring the $250,000 or $500,000 joint FDIC limit, which again, I don't hold much faith in, well, you have no one to blame but yourself. Yet, where do you go? Honestly, if I'm not buying precious metals, the only place I would be going would be very short-term treasuries. And, even that kind of gives me the heebie-jeebies. So I don't know what else to say to people other than I do believe that we are nowhere near out of the woods with the banking problem.
I just realized we're half past the hour. So some people are used to our shorter format. when we go live, we try to go longer so we can handle more questions. So if you want to let people who might have a short timeline tonight know about the weekly special before we can plunge back into some more viewers' questions.
I think they are the Bulmint rounds. Is 249 over sound right?
That's right. It's 250 over spot.
Bulmint rounds,
259.
250 over.
Yeah.
They're very cool buffalo rounds that come in boxes of 400. They're IRA eligible. They're beautiful, and they are in stock and ready for immediate delivery.
I'll get a picture so people can see that because it's quite unusual, and also the purity is a big deal too. So let me just get that photo. Right. Yep. Let me just bring that up here. It's going to take me a minute. And here we go. Right. So 250 over spot is a big deal for people. I'm working with some clients who would really like to get some of their cash deposits out of the bank and into a physical savings account. And they're thinking about gold typically, but silver is quite attractive for that at the moment. And in the past, if you look at a complete round trip strategy where you'd put your money in, your cash into silver, for example, and then figure, well, I'll probably have a real estate closing or something coming up in the next year or so, and I want to sell that back out. You have to look at the round trip penalty of just the buy side versus sell side of premiums, for example. And the higher premiums you get, the more of a penalty there is for buying and selling round trip usually. So things that have very low premium, usually you can get in and out of them with a lower premium loss. So in the past, it was 1,000-ounce Comex bars that were drawing the attention of people that wanted to have that strategy. But now, shoot, I mean, if we're selling Comex bars for $1.69 over spot, and here's the 1 ounce buffalo rounds for $2.50 over spot, it's worth taking a closer look at for people that want to have more flexibility and have a physical savings account outside the banking system. Any comments on that while I get the picture up here?
Yeah, I mean, you also have a tremendous amount more demand in the smaller items. So they're going to have higher premiums. And look, the premium is something people need to understand. And again, I mean, it baffles people why the premiums fluctuate so much. It baffles me sometimes as well. But it's a function, look, of supply and demand more than anything. If you look at the cost of production and taking a blank piece of silver and turning it into a coin and putting it in tubes and boxes and sending it around the world, well, that's your baseline cost. But the supply versus the demand is what really is the delineation between rising premiums. And, you know, we've all got accustomed to higher premiums over the last 3 or 4 years. And you know, we don't have the ability to control those premiums whatsoever. Whom we buy them from all around the world are the ones that dictate that, what those premiums truly are. And they have come down as fast as they went up. Again, we did see the Silver Eagles turn around today and start to move back up. I guess we'll have to see, but I will simply say this. If you see something like a bank failure, if you see an event that shakes the mainstream, yeah, I think, and especially shakes their confidence in things like treasuries or things like banks, yeah, I think you'll see premiums shoot right back up again, as the demand will, I think, very quickly overwhelm even a very flush supply and very, very fair and low premiums, the lowest we've seen in 4 years. So it's weird. It's hard to predict. No one would have thought that, you know, in November 2019, when everything was normal, that a few weeks later, everyone's life would be turned upside down as we headed into 2020. And the premiums have never come down until they did now. And the crazy thing is, I would argue the world's a whole lot crazier on many levels. Take the pandemic out of it, but everything else, the world is more messed up than it was then. And the premiums really shouldn't be here where they are. I'm very comfortable telling people this is as cheap as I believe you will see premiums. I don't know, I want to say ever, but we're pretty darn close to as low as I think you can expect to see them moving forward.
We got a question here. I'm going to try to find it in the list, but basically the gist of it was, how are the availability of 1,000-ounce Comex bars looking on the major exchanges, and do you see premium changes turning around there as well?
Yeah, well, I mean, you ask Ted Butler, he'll tell you that it's a real shortage. You look at the London Metals Exchange, it's the lowest or near the lowest level they've ever had in 140 years. And so, yeah, I mean, they're there, but how quickly is that going to be true when there's some sort of an event on the Comex market where, look, Bank of America has been gobbling up physical contracts or physical delivery. What are they doing with it? Where are they putting it? They've been going long and long and long and long, yet someone is stepping on the price somewhere else. The bars are there right now, but they're not really very plentiful. If there's only roughly 30 million ounces in registered category, and India imported 10 times that amount last year, how plentiful are they? I don't think they're that plentiful at all, but right now they're available. It changes so rapidly. And I think that's the part that's hard to convey. It's hard for me to explain that to people. And that the one thing I've learned, or one of the real stark things I've learned in this industry, is that things can change immediately, really quickly. They change, where one moment everything is one thing and the next it changes overnight. And I don't think there's enough to handle a real push for people to accumulate silver like we saw during silver squeeze, as an example, or even like we saw in March and April. It will rapidly dry things up if people start to look at gold and silver the way they should, as it being wealth, as it being safety outside the system. And I would argue that's why it is methodically being bled dry by the people who know what's coming, the people who know the playbook. That's why there's one giant Chinese silver whale who's 50 million ounces long. And it's in the others category, like we've been talking about since 2020, these very well-informed private investors, 50 million ounces long. And I wouldn't be surprised one bit if they take delivery. The big sophisticated money has been pulling their stuff out before it gets to that point where you just can't get it anymore. And look, if everyone who was had open interest right now on Comex stood for delivery, I don't remember what the number was, but it is many times greater than the bars that are available. And this just happened really over the last several days as the open interest exploded on naked short contracts, many times larger than or many times more than the bars that would be delivered if the longs on the other side of that stood for delivery. So, Dunnigan, it's a mystery why it hasn't blown up yet already. But honestly, I think we're living on borrowed time. And if people want to buy 1,000-ounce bars, they're available today. No guarantees. Tomorrow is not guaranteed.
That's another thing I wanted to ask you, because we've been talking with a number of larger clients who have major events. They're either selling a business or they're taking an inheritance, or they're selling a property or whatever, and they're wanting to move their funds out of the bank. But they're trying to kind of time to a favorable time and wondering how urgently do they need to move forward? Can they do this in tranches over a period of time, or are they going to suddenly find that there's not any availability and the prices run away and wish that they had done more earlier when it was unpopular? I know you've talked to us about the principles surrounding that several times, and it's certainly a question that keeps rearing its head. One of my answers is that one of the ones that Rick Rule likes to use, and that is my main answer is I don't know. I don't know how long the inventory is going to hold out. I don't know how long the low prices are going to prevail. But your general philosophy for people who do definitely have a strategic intention to make a move, and they're just wondering how rapidly they should make that move.
For my whole career, my stock answer would be cost averaging is what smooths out the uncertainty curve. And I'm a proponent of cost averaging. And I've always felt that if I tell people, well, I would buy it all now, even if I feel that it makes you look at that person cross-eyed, like, are they really looking out for my best interest? And truth be told, cost averaging really is the model that I've used my whole 33-year career, buying it every 2 weeks. I'm a proponent of it. The question becomes, how close are we to that moment where things get really nutty? And look, in the few years that you've been representing Miles Franklin as a broker or as an independent affiliate broker, you've seen exactly what I'm having a difficult time articulating. And that is, one moment it's flush and premiums are low, and the next minute it's upside down and its premiums have gone crazy and the availability dries up. Who would ever really know? Right now, you don't have to. If it stayed like this, you take your time and cost average. But look, I think the one thing that is really true is that this stuff is already starting to happen, and we're starting to see cracks all over the place. And at what point does it break? That I don't know, but I can tell you that the people who are concerned, they feel it too. There's no way that anyone can answer that other than to simply say that in my heart, I think we're going to reach that point. And again, it always centers around the mainstream being jarred into realizing that the road to retirement maybe isn't paved with stock certificates and mutual funds and dollar bills. And maybe they need to think rapidly about how their money is allocated and deployed. We're nowhere near that moment yet where the mainstream is panicked. And quite frankly, it should have happened in March and April, but they came in and bailed out these banks instead of bailing them in. And especially when you look at Silicon Valley Bank, they had 10 accounts with $14 billion checking accounts for 3 years. 10 accounts with 14 billion in their accounts cumulative. That's an average of 1.4 billion per account in a checking account for 3 years, when interest rates were the lowest they've ever been. And the FDIC insurance would have only covered that much of it. So the lunacy, the irresponsibility, the lack of risk management and of due diligence and of control, and yet they get bailed out when the law said they should be bailed in. If that bank had been bailed in, you would have seen holy hell in this industry, and everything would be gone and no one would be able to find it. And that's how fast it happens. Is it going to happen that way? I think it will. I have a hard time saying that because in the back of my mind, I'm like, yeah, they're all saying right, because he sells gold, right? Yeah, I do sell gold. And yes, I believe in it to my soul. And yes, I buy it all the time. And yes, I think it's going to happen that way. Until it does, cost averaging works. And until it doesn't, until that moment, like Mike Adams calls it Operation Sandman, where countries dump the dollar in unison all at once on a Sunday night. That happens, yeah, all bets are off. And I think people need to ask themselves, where are we on this curve? Where are we? And if you think we're getting real close to that moment, then no, you don't have time. And that's the truest answer I can give you on a tough question.
It is a tough question. One of the challenges that a lot of people face who are trying to do the right thing is that it seems that in the environment that we're finding ourselves, it's those who are being irresponsible, those who are being dishonest, those who are, bending and breaking the rules that get rewarded, and those that are being responsible. I mean, look at the bail-ins that happened, or look at debt. They'll just talk about debt forgiveness and this, that, and the other. Those who have been running balanced budgets as families or as companies or whatever are on the chopping block, whereas those who have been complying with the government's preference for people to be heavily indebted and dependent upon the government are being rewarded. So there's lots of concern from people who've been trying to just do the right thing, just be a good Boy Scout and show up and be honest and follow the proper rules for the good of your fellow man and take care of your family. And then you're going to get whacked, or you're going to be deplatformed if you speak the truth about things. There's a lot of comments in the chat tonight about truth, the importance of truth. Perhaps that you mentioned that's one of the things that upset you the most about what's been going on the last couple of years. So you should probably talk about that as well, because that's part of the whole theme tonight is what you're not being told. Well, that means talking about the truth that's being withheld.
Yeah, I'm to me, it's more concerning and has been than anything. In 2020, when everyone was freaked out about a pandemic, I was more concerned about the loss of our liberties, of not being able to say things on your show and other shows, of watching Sarah Westall, a gal who I really think is awesome, and watching GoDaddy strip her website, her domain name, because she said things that they didn't agree with. I'm more concerned about where I come from. You respect people, you respect who they are, you respect what they do, who they are. I mean, if someone has a lifestyle that they choose, you can respect it. You don't have to celebrate it. And we are being forced into a way of looking at things and thinking of things that to me are eroding the fabric of this country. But maybe the most disturbed I've been in 4 years is watching what's happening with the Justice Department and to former President Trump. The law is not being administered equally. It's not. And for people, if they're honest with themselves, they'll agree with that. It's not being administered equally. And and weaponizing of a Justice Department is something that I find terrifying for what America is, what America stands for. You can say, yeah, we screwed up financially, but we are the beacon of freedom and liberty and truth and justice. Do people believe that anymore? And maybe some do, maybe some question it, maybe some wonder about it. The rest of the world, I guarantee you, notices it. And look, even the Moscow Metals Exchange, they publicly said the reason they wanted to do it was to break the deceit and the manipulation of the Western system. Everyone knows that. You can look at the president's working group on markets going all the way back. I think that's what you call the plunge protection team. I mean, there are no free markets anymore, just manipulation. But when you start to question what this country stands for, as I said in my presentation, where people bundled up tires, tied them together with strings and tried to get across the ocean to find a better life, or walk thousands of miles through desert to get a better life, to have justice and freedom. They escaped tyranny. My wife, her family emigrated in 1972 from Russia to find a better life. And how many people are questioning what this country stands for right now, and watching the way that justice is being administered to two different presidents? And, I don't care what people say about former President Trump. It's the first time a president has been indicted like this, and it's horrifying to me, especially in the respect that what the current administration is doing on many levels, you could argue, is far more egregious. And to me, it is the most concerning thing of all. And I think it's only going to accelerate the global de-dollarization, because if we strip that away, we're already, by traditional measurements, we're a banana republic at 120% GDP to debt to GDP. Traditionally, that's a banana republic. But when like a South American country jails its political challengers, I mean, come on. I mean, are we going down that road? And I find it to be very, very frightening on a very large scale. And even talking about it kind of gives me the willies. But yeah, honestly, Dunnigan, to me, that's been the most distressing thing of everything that's happened over the last 4 years.
I've always been grateful that we're able to be here and have these conversations as frankly as we do. And yet even our ability to be candid, we have to sometimes speak we have to couch our terms and kind of use analogies or metaphors or whatever, because we can't talk directly without risking losing our ability to even be here and have these conversations. But I'm especially grateful. I just wanted to shout out to all of the viewers. We've got so many people participating in the live chat tonight. Very loyal crowd to show up for our live streams and for our premieres every night. Just thank you, each and every one of you. We love you're here. We love that you're taking part, that you're being active, that you're interacting, that you're supporting each other, helping. And Andy's taking the time off even after a travel day to be here with us. Andy, do you want to remind everybody about the special? I'll put the picture up more quickly this time.
And I'll tell you, spending a couple of nights with Bill Holter, he's a character, and I think I'm still hungover actually. And so I'm sorry if I'm a little ragged. I love Bill though, and he's a riot, and always a wonderful experience being with him. Yeah, these are very, very cool 4.9 fine silver rounds, boxes of 400, IRA eligible, and the lowest premium we've seen in 4 years on silver rounds.
And yeah, the 400 is a little bit surprising. They're packed in tubes of 20, just like the U.S. Mint does with American Silver Eagles, or most of the other mints, including Austria, for example. But they're not packed in boxes of 500, but 400. So that's interesting. It makes it a little easier to wrangle those, because that can be a challenge with larger boxes.
Yeah, I mean, you could argue just about everything is on sale right now from a premium and availability standpoint, and but these are as good as, and it's interesting because when stuff really disappeared for a long period of time, you couldn't find the one thing that disappeared faster than anything were silver rounds. You couldn't find them anywhere because they offer a great value, and in a small utility form where you have functionality, they were the most difficult thing to get for a good portion of the last couple of years. So yeah, I like these a lot. And we had an exclusive on them for a while. I don't think we do anymore, but they're a new company and they're a wonderful product. And the fact that they're IRA eligible and 4.9 fine means they're of the highest quality.
Well, folks, appreciate you asking the questions that you have tonight in the live chat. Many questions about freedom, about truth. There's been some questions. Reliably, Neil Hahn talks about platinum. Any further thoughts from you, Andy, about the prospects for platinum in contrast to gold and silver going forward? You've mentioned in the past that it doesn't have as much of a history as a monetary metal. A lot of what we've been talking about are monetary stresses, but more of an industrial metal. But go ahead, and as a precious metal.
That's exactly what it is. And look, its industrial utility is in diesel catalytic converters. And, you know, diesel, well, who knows if diesel is going by the wayside. The big green battery powered bus company that President Biden touted so well just filed for bankruptcy. And so, but nonetheless, the main use for platinum is in catalytics. It is used in some battery production as well. The reason to buy it would be that the primary sources of supply would be Russia and South Africa, that it is distorted in its relationship to gold, that it has great value in a similar fashion to the silver to gold ratio. You see the similar thing with platinum to gold as well. To me, it's an investment, and it's not wealth, but it is an investment that's intriguing. Look, I think you can buy some of it. Where we are right now, I'm more concerned about buying things that will protect you if things get dicey in the future. And platinum, to me, really doesn't fit that bill for my own personal preferences. But the logic of the question that he's asking is spot on. I mean, from a ratio, historical, supply, all of it, it makes sense. What happens to its main usage with catalytics in diesel trucks and whatnot, I'm not quite sure. But yeah, it doesn't have the history of money that gold and silver do. And I think for that reason, it would be a very distant third in my accumulation. I have maybe 1 or 2% of my personal holdings are in platinum. I don't think I own an ounce of palladium anymore, and just a very small bit of platinum. But the argument is still intriguing.
Well, folks, it's great that you've all been here. I wanted to mention Andy has alluded to several times since the Rule Symposium that he got a rousing reception for his very fiery talk at the Rule Symposium. And we weren't clear at first whether after the symposium, if you weren't able to attend, it's been clarified now, you can still purchase remote access license for the rest of the year. So if there's a link at the top of your live chat here, there's a link in there, go ahead and click on that. And rather than I think the full price for attending the symposium was like $6.99 or something like that, there's $3.25 or $3.29 to purchase 6 months access to all the recordings, not just Andy's talk, but all of the recorded live stream presentations are recorded, and they have access for the rest of the year. So if you missed that and you've been wondering, the link is right at the top of your live stream right now. And thank you, Neil, for asking your question. You're very welcome. And there was because we can squeak in one more question here. The discussion has been that a lot of people talking about people who just don't know, they're in stock brokerages, firms. Do we have any information about whether the stock brokerages are in the same kind of tough shape, or even perhaps even more leverage with margin, et cetera, than the banks that we've been talking about, the fragility of the banking system, but people wondering about the safety of their funds in brokerage accounts?
I think they're all tied together. I mean, they're all tied together. The brokerages have to house their money in a bank somewhere. And so there was a lot of talk for a while about Schwab. They're over leveraged, and the Schwab Bank as well. But a brokerage, like Sprott, for example, would keep their money with the Royal Bank of Canada, their cash. So look, if the banks fail, the whole system is in trouble. How about the insurance companies? Where do they invest their money? Where do they put their money? They invested in treasuries and they invested in stocks, but where do they keep their cash? They're not keeping it all in-house. They're keeping it in a bank. And if the banks fall, everything is going to be dragged down with it. The systemic nature of it all, I think, calls into question banks, brokerages, and insurance companies. And look, I'm not an expert on this whole system, on what would happen to the brokerages, but there are a lot of people who actually have gone as far as, and a lot of the brokerages really don't want you to do this, but as far as pulling their shares out in street name, instead of allowing the banks to hold on, or the brokerages to hold on to them, because of the threat of rehypothecation and of shorting and all of these things. That, look, nothing is safe if we see a system that implodes, starting with the banks, and the brokerages would be no better off. Schwab, I think, is at the top of the list of that concern. So look, spread your money around if you have to. Have some in a brokerage, have some in a few different banks, go directly to treasurydirect.gov, go to a Morgan Stanley or a JP Morgan or whatnot, and put some money into a money market. I mean, you can spread it around to mitigate the risk. It seems like all of the choices are kind of sucky to me, but better than leaving them all in one place, where if there is a problem, you're screwed. SIPC insurance, I think it's 500,000, I want to say, SIPC, I think that's what it is. So, you have a few $1,000,000 in a brokerage account, and they run into trouble. Here again, are you really covered? No, you're insured for a small portion of it. So I don't know that anything is really safe right now, done again in this environment.
Well, we're going to have to wrap here, but I wanted to give you a couple of sweet spots out of the chat, some comments that people have put in there just recently here at the end of the chat. Mike Rothy says, "Thanks, Andy. You are a voice of reason to the madness." And we also have, where did it go? Yeah, A Beautiful Life says, "Mike Rothy, true statement. Andy is a true and respectful gentleman." So, Andy, as always, thanks for joining us.
Look, hey, thanks, you guys. I appreciate it. These are really tough times. They're really challenging times. And I tried my hardest to think about what would happen if this happens. But that really is the whole frightening part of all of this, is the way that everything is tied together, the systemic nature of it. They had to bail out AIG, because if they didn't bail out AIG, it would have dragged down the entire system. It would have dragged down all the companies that had credit default swaps backed by AIG. So if the insurance backing the credit default swap collapses, and one of the counterparties collapses, how many other entities are brought down with it? And that's really the scary thing. You talk about, real quick, and I know we need to go, you talk about mortgages. Well, these mortgages are bundled up as mortgage-backed securities and sold to the brokerages. So, who would have ever thunk that Bear Stearns and Lehman Brothers would have gone upside down? Who would have ever thought that Wachovia would have gone upside down? And, it happens. And quite frankly, the systemic nature of it all, the leverage of it all, the undercapitalization of it all, the rationale of it all, and the fraying of the fabric of this country is, I think, accelerating an event. Don't know where, don't know what, but if you believe, as I do, that the ultimate desire of this administration, of the IMF, of the BIS, of the World Economic Forum, all of these 3-4 letter acronyms that are controlling, supposedly pulling the strings, we are going to go to a central bank digital currency. I believe that they want to create an event that makes people broadly accepted. Have no fear. Look, Medicare, Medicaid, Social Security, government, military pensions, the 150 trillion in unfunded liabilities, that's owed to us. So you blow up the system and collapse everything. Have no fear, sign on the dotted line, take the new CBDC, you'll be made whole. I do believe that they are creating this instability instead of gravitating and grasping and holding on tight to the privilege that is being the world reserve currency. We are doing everything to ruin that in terms of the way we are handling our affairs outside the country, weaponizing the dollar, inflating the dollar, blowing up the bond market, and what we're doing here with the lunacy that is this country over the last couple of years. The way that this country has changed, the fabric, the moral structure has changed. It's all part of a bigger picture. And it's like, it's more gasoline being poured onto the fire. And what's going to really make it blow up? I don't know. But when it does, there will be a lot of things that people had no clue on. Had not even thought about it, like insurance companies, like pensions, like banks, like things that people have just completely not thought of. They're going to blow. And when they do, then everything becomes a panic. And that's why you need to, we always come back to the fact that your show used to be called Reluctant Preppers. Reluctantly prepare, even if it means you have to do so reluctantly. Just do it, because if 10% of what we're talking about happens, you'll be really glad that you took at least 10% of your assets off the table or reposition them into a safer place away from this systemic nature. Look at the biggest money in the United States, the biggest money in the commercial banking system. They're fleeing the banks that are supposedly safe. So that should be kind of an eye-opener to you. Just like the biggest money are draining the exchanges, it should be an eye-opener to you. These are the people who are maybe a little bit more informed than the rest of us. So that to me are the crumbs that are being given to us. Whether you choose to follow them or not is up to you. And I would, at least with some of my assets.
All right, Andy, gosh, we appreciate you being here with us such a regular basis. I didn't know that we'd be able to pull this off on a big travel day for you, but thank you for making it happen. I
got my second win now, so now I'm going to be up all night. So
well, hopefully
it's all good. I appreciate you, Dunning, and I appreciate everyone out there tuning in, and I will be back next week. So you stay well and look forward to picking up where we left off.
All right, everyone, take care. God bless you and your families. Be safe, be well, survive, thrive, and flourish. And we're here to try to help. So thank you, Andy. We're going to let everyone go. Take care, everyone.
Good night.